Welcome to the People's Economy Podcast, the only podcast where we keep it all the way real. Our mission here is really to empower you with knowledge, give you some tools to educate yourself so you can go out there armed up, smarter, and wiser, and more intelligent than you were before you watch this episode. So a lot of our DMs are feedback. People are asking us about stock investing, maybe the philosophy of stock, our philosophy of investing and things like that. What how to find information on companies, how to find online brokers. So Biggs, in your research, I mean, what online broker companies have you looked into, and which one do you like the best?
Uh, right now I have Ameritrade, um, but I looked into like Fidelity and I think Charles Schwab too. But to me, it was about whatever one fit, like your whatever interface fit your level. So whatever felt comfortable to you, that's what made me choose the platform I chose. But it's all about, are you able to have access and have the resources to learn more about it and to see like your results and your numbers, um, and how that feels to you. That's really how I chose the platform I chose.
I agree. I like Fidelity. I would suggest that our viewers maybe they start small. Maybe they buy like one share and
Right.
maybe a number of companies that they were looking into, and just see how the stock market moves. See what it's like owning a stock, because a lot of ups and downs, and you only get over that emotionally after going through it. Like you have to experience that. It's not something that can be taught. You have to see your stock. You have to see your money go down. That's its own
Right.
education in itself.
How do you think someone young who hasn't made, or not even young, who's trying to invest, what do you think your mindset has to be going into investing? Like, how do you have to look at invest? How do you have to even approach it? Because you're right, you do take a loss. Like, you got to be ready for the emotional part of it.
Oh, I've seen people hit a stock one day, they're all on joy. Next day the stock goes down, the whole face expression is different. I mean, you have to go through that to learn that. You can't, if you buy a stock and you get lucky, you sell quick, you make some profit. You're not really gonna know the game until you feel that loss. You have to feel that in your gut. You have to feel
Right.
like that loss. You have to see that stock go down. So I would
Right.
suggest maybe they start small with one stock, maybe an Apple, a company like that, a company they use every day. We can even give them some stocks they can look into. Maybe we'll give them like 5 or 10 stocks that
Okay.
they can do their own
Okay.
research.
Okay. Um, I think that's a good idea. I think what you said is true. As far as picking stocks, what I like to do is do my own research on the market and be practical too. So I try to invest in things that I use, and things that I think other people are using all the time every day. Um, Apple's a good one, or like GE, or there's a couple.
Amazon, Amazon.
Amazon, right? Amazon, if you can get in on that. Amazon's definitely a beast in the game right now. But I think if you think more practical, that's an easy way to get in and not feel overwhelmed. If you just try to
Walmart,
buy into
Walmart.
Walmart,
Yeah,
exactly,
yeah,
exactly. Even if you're coming in and you had a more retail based mindset, if you like Nikes, invest in Nike. Invest in Nike. Like, go to something just so you could have that first loss, like you said, because you're gonna have it, but make it something that you like feel like you control, if that's what you need. You know what I'm saying? So buy the Nike stock if you like Nike. Just make sure you're invested in it too.
yeah. I would suggest they buy pick 5 companies, maybe Nike, Apple, Amazon, Walmart, Target, Lowe's, whatever, Home Depot, and then buy one share of each company and watch your 5 stocks, research the companies, read the articles daily that's coming out on those 5 companies, so you can understand how the what's going on in the news and what's going on with that company, how it affects the fluctuation of their stocks. You have to see a couple of earnings seasons and see how it moves. And actually, I'm glad you brought up before how you watch the market, because that's key. You have to watch, CNBC. You can get the app or Bloomberg TV. You have to watch the overall market, at least the 3 major indexes like the Dow Jones, S&P 500, and Nasdaq. Watch how they move and watch how your stocks move according to the 3 major indexes. It's good education.
No, you're definitely right. Do you think, let's say you're an investor in in America in the stock market. How intrigued are you about other economies and their stock market, or should you just be laser focused on America's market or the market you're in?
That's a great question. You see me smiling. I feel like I kind of broke a code because the other markets they opened up before. So the Asian market and the European market. The European market I think opens up at 3 a.m. New York time. So when you watch someone of that market, our market kind of seems to follow the Asian and the European market. So I feel like I almost cracked the code with that one. Like, because like I'll see it 3, 4 in the morning, then I'll text some of my buddies like the stock market's gonna do this today. A lot of times I'll be right, but I'm just basing it off of stock futures and what's going on with the opening of their market. Because it's 9 o'clock there, so they're new. The stories that we're not getting until like maybe 9, 10 o'clock in the morning here, those stories are already on Bloomberg TV at 3 a.m. because they're
Right.
covering, and as it opens, they're covering the stories that we're not going to get till 9 a.m. here. So yeah, I mean, I like to watch futures. I like to watch European markets, Asian markets, and see
Yeah.
just going up or down and see how the major indexes are moving there.
See, that's smart. That's why I asked. I knew there was something. I knew there was something to it, because if you need to forecast what your market's going to do, you have to have a reference point to other things. So looking out at the Asian, the European markets, those are good tactics to do. So I think if you find a way to simplify it a little bit for you, because I think people might get intimidated a little bit by looking at an index or a CNBC. How do you think you should start? What's a good way to start, even once you invested and you bought the Apple, you bought your one share?
Great question, because CNBC, the lingo they use is crazy. So what I did like the first 6 months, I just watched CNBC all day, every day, until I kind of got some of the lingo,
Right.
because they really talk like real specific.
It's like
So you
learning another language almost.
exactly.
Right.
Yeah, you have, the language they speak, but it feels good like when you start learning it. Like it's like, yeah, I know something now that I didn't know before. It's like
Yeah.
breaking like a cryptic language. You know what I'm saying? Like
Now that makes sense.
it's pretty because once you learn that, like you have a different type of you have different economical knowledge and different economical power. And most people don't take the time to understand what they're saying. So once you power yourself with something like that, you understand like enough of the stock market. I mean, that's an education that if you go to school, college, you can only learn so much. You have to actually buy stocks to really learn. You have to understand how to read resistance, support, things on charts and things like that. Just small
Right.
things. They're not really that hard to learn, but you learn those over time, day after day, month after month, year after
Right.
year. You educate yourself. It's like an ongoing process.
No, I think it's funny how we talk about the swimming. You could read a lot of books about how to swim, but you
Mm.
gotta jump in to swim. You gotta like jump in to swim, to feel the temperature of the water, see how it feels to be in it. That's sort of what it is with investing in the market. I think at first people tend to use it almost like a bank sometimes, and it's not
Mm.
really made to do that. It's not made to like try to come in and get a high dividend or a high investment rate and try to just double up or whatever on your money. I think it's really for a long term. I think it's definitely a long term option, and you have to sort of ride the ups, the downs. It could crash when you totally just lose it all, quote unquote. But those usually cause rises too at the end. If you just stay in, it'll come back up, and that's when riches are made. So I think it's important to know. I think it's important to know.
Very important. That's why the two of the greatest investors, Warren Buffett and Charlie Munger, in their conferences, they always say, if you treat the stock market like a gambler, you're gonna get results like a gambler.
Right,
People that don't know nothing, they want to put all this money when the stock's already at its height, then they lose $7,000 overnight. You can't jump in like you said. It takes time. You have to research. You have to. Charlie Munger and Warren Buffett, they don't even sell. They don't trade at all. They buy and hold for years, decades. That's how you
right,
really well. Me
right.
personally, I like that type of investing too.
The long term, like invest and stick with it. Me too. Try not to sell unless it's last last resort. You might have to sometime, but you get savvier as you're in it.
Exactly. You get to my point. You get savvier as you go along. That's why I think you have to invest. You can't jump in and day trade. There's no way you're gonna know enough. I wouldn't. I would invest for like 4 or 5 years and learn really how the market moves. Maybe see 20 earnings seasons, 4 earnings seasons a year. See 20 earnings season, which is like what 4 or 5 years, and then you can start trading. You have to know what's going on. You have to
Right.
educate yourself before you trade.
Right. Right. No, that's 100. That's 100% true. All right. So if I'm a young person again, trying to figure out stocks and trying to make my first investment, but I'm watching the market, right? And to me, it may seem volatile. It might seem, we don't know what's going on. Are we home? Are we outside? What's the new market going to be? What do you think is a good incentive to make someone feel like they should still invest even in a market like this? Like what's going on?
That's a great question. What I would do, I'd pull up maybe like a simple chart, like maybe just put in the Apple chart and maybe watch how it moved over the last 12 months and see like maybe it actually at an all-time high. I think it says at 323 now. But 12 months ago it was at like $200. I would want to see, I would watch the chart and when it goes as low back as even like a 50-day moving low or something like that, then maybe I would try to buy in on a down day. Try to buy in when the market is down. Yeah, you want to time it right, but you never
Okay.
know because sometimes you can think that it's not going to break support, which is support means that it's going. Support is the line that has been hasn't broke. Like the 320 is the support. That's where it's been for like 6 months. So people think
Okay.
traders use that. They tend to think they use support and resistance. Support is the top where it's high, and then the resistance where the low. But it could break through either way. But sometimes though you think like a stock might be it's already overpriced, but then it doubles. So then it's like yeah, you kind of missed out on that the 100% gain. But so you can use things like PE ratio, which you can find just
Yep.
on Google. You can find on your brokerage. PE
Yep.
ratio and charts would be things that I would look at to try to indicate when to buy in.
And like you said, some of it is just there's a little essence of I don't want to say luck, but you gotta know when to buy in to really get in to the most substantial gains in the market. Some of it is knowing your thing, and some of that is being in the game and being around it to have that feeling to know when it's time to buy in, it's time to get on this, it's time to jump on that. That only comes with your first investment and sort of watching it go up and down or whatever the market
That's
says.
that's 100%. You have to do your research. Yeah, but you have to get in. You have to buy at the wrong time. You have to sell at the wrong time because that's how you learn. That's the only way to learn your entry points. Like it's not like a
Mm,
set system. You have to mess up. You kind of have to fail and invest in to really understand how to succeed.
right, right. Well, then it becomes like a learning, because that's when
Learning.
when you're in it, it's like a learning, not a loss. It's a learning. So you get to learn, and you only get that
Mm,
from being in the investment game. So like Amazon is obviously through the roof right now. If you just look at
yes.
the company, if you just look at the company and how it did, and just convenience alone, how it serviced customers during this whole time. Uh, do you see another company maybe in the same vein as Amazon coming up that might, or do you think it'll be many little companies that form an Amazon?
That's kind of crazy that you said that because the wisest, the wisest and smartest investor that I know personally told me today, he's like, he put like $100,000. If you put $130, he said $130,000 in Amazon. He guarantees in a couple of months you have 170,000. He thinks
Mm,
Amazon is really going to
like
go up.
that.
He has faith. He would put a lot of money in it like that.
Wow. Wow.
And
See?
that's the second part of your question. Shopify is actually working on doing their thing more like Amazon. Like they might start like warehouses and have product, and they're looking into all that too.
Oh, wow.
But we gotta look into that as well too.
Oh, wow. Okay. Okay. That's different. That's different. Yeah.
Yeah, that's different. We gotta check
That's
that out.
different. So, okay. So there's definitely room. There's definitely room for expansion as far as that goes. Amazon will always be sort of quote unquote king, but there'll be other things
I
that
would
could
say
buy
there's
in.
room. I would say there's room because they can't dominate everything. They may get in 20 different categories. They might only be great at 3. There may be 17 small companies that are better than what they're trying to do in those other categories. You know, there might be like Netflix
Right.
might be better than Amazon movie no matter what. Like
Right.
Google might be better than like Amazon has a search or a voice, things like that. So I don't know if they can really. When you stretch out too thin, you can't really be great at everything. So I think, like you
That's true.
said, little companies will compete with them in certain categories, but I think
Right.
they will dominate certain industries as well because they're really trying to stretch out. Like they're going against UPS. Like how you go to the UPS at the same time and Netflix? Like they're going against everybody in totally different sides of the spectrum.
No, it's definitely true. Especially UPS got some good business out of this whole thing too. I'm sure
Yeah, yeah,
UPS UPS was sending a lot of packages this whole time because more and more people were, more and more people at home. So they just sort of adapting to the market and what's going on. But
That's
I think
probably why he said he would put 130,000 Amazon because of what you just said. Because it
right,
was um,
right, right. Because Amazon, I mean, almost half the country has an Amazon Prime account. So you had Amazon this whole time, and the packages were coming pretty much regular the whole time, which is a whole other thing. But Amazon was on top of that too, so that's a good
Amazon opens up like all these other companies too because whoever has Amazon store, they're probably going to use like Microsoft Excel to
right,
organize their information. So like
right,
other companies grow with Amazon.
right, right.
Microsoft is a great stock. I think now our viewers should look into definitely Microsoft. I would say.
Okay, so so yeah, definitely Microsoft. Why is that because of what is that because of the technology? Is
I
that because
think
of technology?
Microsoft technology, but I think Microsoft it just wasn't as popular as the other. Sometimes popularity actually drives the stock up more, like what's trending for the moment. So Microsoft was doing great, but wasn't moving as fast as some of the other big companies that were hyped up. So it was kind of like still fairly cheap compared to the other companies because it wasn't overbought yet.
Okay,
It wasn't a trending stock. And
okay,
then another stock I would stay in the stay home economy would be Facebook because a lot of people sprung up new businesses and how to do e-commerce. They all started a Facebook page. Like we started Instagram page, people's economy management. Other people started Instagram pages and Facebook business pages from home during these
right.
times. So I think Facebook, Microsoft, you should definitely look into those two companies right there.
Yeah,
And
those
Apple
are
as well. Apple.
Apple's definitely a staple.
But then, as you learn the simple ones, when you look at technology, you can actually, as you research, you can find like tech companies that you probably never heard of, but they're really huge monsters that are compatible, like Microsoft and Apple. But start with the regular companies then as you get better, maybe you can branch out, look into the tech companies that they like. Maybe the chip who puts the company that puts the microchip in Apple, like things like that.
Right, right.
Tech really has a lot of small companies. They're small to us, but like they may be worth $20 billion. So they're not popular names trending. So there's a lot of research to do, but don't
Oh, but
overrun.
with tech, it's definitely about a bunch of little companies making a conglomerate company. That's kind of how tech works. Like it's a lot of little companies that end up making a bigger one. So that's perfectly said. That's exactly what we're sort of looking at and trying to get in that way. So
But like you said before, we don't want the beginners to feel overwhelmed. So start off maybe with the big companies.
right,
There's something called FANG. It's actually Facebook, Amazon, Apple, Netflix, Google. You can start with that. And there's also another acronym. It's called WATCH. It's Walmart, Amazon, Target, Costco, and Home Depot. So those are 10 basic companies you can start with. Look up Google the companies, read the articles, read the information. I'll just Google like the company, like Amazon stock, and then you get the information on the
okay,
company parts and articles
okay.
updated.